think my stop on that might have been too close. We should have probably been 2 points under Globex's low. As it was, we're only 75, 0.75, 3/4 of a point. Actually, 3/4 of a point under Globex low. Yeah, that was a mistake. Which means if we see support down here, if we see this cross trade hold and we run in a line for some consolidation, we see the tick building higher lows. Um, so it looks like the selling is drying up down here. We're going to take the 1750 as long, 217.50. If we can get them long, 217.75 long. And there's no need to risk a lot here. We're going to risk 2 points to just below the low here at 1650. So if we risk 2 points, it'll put us at 1575. That sounds pretty good. Today might be an opportunity to do some reverse trade also. Considering 1317 as a critical area. If we don't hold 1317, we're on our way down to test the lows in the 1260s, 1280s. Question is, how do you implement a reverse? Do you reverse at 1575? That's probably the right trade. You have to risk a few points. Let's try that. Let's reverse at 1575. So instead of 1575 being a stop, 1575 is a reverse. Going to be interesting. See, in this segment of the video, we have a couple days of market profile. The 2 days that are in the main view there are January 22nd and January 23rd. And you can see the white line is where we are trading currently. The scale on this chart is 1 point. So it takes a 1 point movement in the market for this white line to move. We're trading at 1650 right now, 16 and a quarter, 16. So we're close to having our reverse strategy hit. One tick away. There's two areas. All right, 1575 got hit. There's the reverse. So now we have two short. 1575, and we sold the other two 1575 for a 2 point loss per, combined 4 point loss. Now with this 1575, our stop, logical place for our stop here now would be 24. C period high, 23. If it's a rotating day, you're going to get killed on that trade. But we broke down. Here we have the financial sector, the XLF, down 2%. We have the XLI, the industrial sector, the ETF, down 1.25%. The technology SPDR XLK is down about 1%. Let's put our stop there at the C period high for now. We might change that on what happens here. We need to hit the bid quickly. We don't want to just consolidate here slowly. 23. So far this reversal strategy hasn't worked. One thing I see that I don't like is the New York New York stock tick chart is making higher lows while we're trading here in the 15s. We're going to keep a close eye on that tick chart as we make new lows here at 1550. Tick chart's making higher lows. We're looking at a 5-minute tick chart. Alright, there the tick chart ticks lower. Looks like a nice red candle is about to close. Okay, we could be on our way here. Okay, there's no need to risk all the way to 23 on this trade. Um, D period should be just opening up. Yeah, I don't know about. I'm a little bit confused on this stop. I'll have to think about this for a second. If we bounce back to the consolidation where we're just trading 17 to the 20, 21. We're going to put our stop at 21. That's an area where there was some passive selling went to initiative selling. 21. Well, we seem to be on the right side of this reverse. Good. We'll move our stop down accordingly. We're in trouble on this trade. We have to get out of 13.17. Out 13.75 is our fill. Can't get the chart here. 13.7. 15.75. There we go. So only got 4 points on that trade, and there's a couple reasons why we got out. The tick chart is reversing. Our financial sector, the XLF is down still. The XLI and XLKs are down. The energy also is down. I hope I didn't get scared out of that trade. We'll look for a reposition if things continue, though. I think we have to reposition ourselves here in the 1350 area. We're going to get short too. 13. Let's see if we can get the 1375 short to 1375.
Everybody has got them right. We hope you're feeling good. Well, if not, you're in the right place.
Look at all this volume here.
There's a song all about feeling
All this
good.
heavy green volume. 61, 24, 10, 17, 31, 255. But the price could only move a point and a quarter. I would argue that this is passive selling here. And the tick chart just reversed to the second standard deviation after making a series of lower lows during the downtrend to 14 to 13 or to whatever low was 11. So we feel comfortable with our 1375 short, even though we got out of our trade seemingly prematurely. Our stop on this trade is the 8 period low. We're just a tick or two above it at 1975. We're trading right around where our original reverse was, 1575. Our short here is a little below us at 1375. The D period is almost over. Another few minutes to the next period, about 5 or 6 minutes to the E period. And we should continue moving down. If we don't continue moving down in the E period, something could be wrong with this trade. All the sectors, though, are negative. Materials, energy, financial, industrial, technology, staples, consumer discretionary, health, they're all down. 1.7%, 2%, 3.3%, 1.5%, 1.4%, 1.2%. Quite a bit. Boy, going again quickly, we're running out of time on the video. But look at all this trade in the markets: 16 and a quarter, 13, trading 14 and a quarter. All of this activity shows up on the screens as buying, but I argue it's passive selling. If that's the case, if we can stick with this trade at the close, we might be in good shape. The close here on these two profiles, January 22nd and the 23rd, which was the area that we bounced off of from the lows there at 1260s. You can see the close here is 1307, and you can see the J period high here is 1307, 1308. So if we get down to this area and fail, we could be in some trouble. That would be a good target. We're just consolidating here. If we break to our stop at 1975, that's going to be a reverse, not just a stop. Reverse, considering that we've had a false breakout and we'll probably close the gap. I changed my mind on the reverse. If we hit our stop, we're stopped out. We're going to produce this video and continue on the next one.